Hahn-Tech Premium Trading Tools, professional quality tools designed to sharpen your edges. Hi guys, welcome to the demo video for our brand new indicator toolbox titled Trailing Stops and Targets. This is an indicator package consisting of 5 separate chart strategies that you can use to test various exit strategies on Thinkorswim. Each of these exit strategies are designed to integrate with nearly any of the existing chart strategies that come with Thinkorswim, as well as most of the custom strategies that you might decide to create on your own or purchase from someone else. And we'll just give you a little taste of what is to come in this video by looking at this chart that we have in front of us. I'll go ahead and look at the studies that we have added to this, and you can see that we've got our stops and target exits strategy. That's one of 5 included in this indicator toolbox. And along with that, we've got Bollinger Bands LE, that's long entry. That is a built-in strategy that comes with Thinkorswim, and we've gone ahead and added that in. We'll get into all the details later. I'll show you all the settings and how to adjust it. But I just wanted to give you a sampling of the various tools that are included in this indicator toolbox. I wanted to show you that we've got the Bollinger Bands entries here, okay, in the magenta. And then we've also got these trailing stop LX. You see the trailing stop LX, that's coming from our indicator. And also you've got a target LX. So what you've got here, really basically, the magenta bold line down here at the bottom, that's your stop loss, your initial stop loss level. Then the cyan line, the bold cyan line, that's your target, that's your profit target. You get to adjust those through the settings. And then we also have an optional trailing stop that you can turn on or off. You can see in this particular case where I'm moving the mouse cursor, the crosshairs, this particular trade exited at the target. And you can see that these previous trades here exited at the trailing stop. And the main concept I want you to understand here is that we've applied a built-in Bollinger Bands chart strategy that gives you the entry signals. And then we've combined this with our indicator tool here called Stops and Targets Exit. So it's designed to automatically integrate with this existing chart strategy so that you can go ahead and manipulate your profit and loss and then experiment with different settings to identify the trading edges that are most suited towards your trading methodology. And now I will take some time to cover the legal and moral obligations of any video containing material of this type, which is to clearly state that I am not a professional trader. I am not a certified financial advisor. Nothing in this video should be considered a recommendation or a solicitation to buy or sell any financial instrument. Trading involves risk, and that risk means that you may lose all or more than all of the money you have deposited in your broker's account. Along with that, I will also point out that with strategies, you have some additional declarations here, right here from Thinkorswim themselves. Okay, and I'll go ahead and blow that up a little bit so that you can see it clearly. The study parameters and data use historical market data and information gathered by TD Ameritrade. All output is for informational and educational use only, is not an investment recommendation or advice, and should not be relied upon in making the decision to buy or sell a security or pursue a particular investment strategy. Okay, it's very important. I know we have to cover those disclaimers and give you those warnings, and at the same time we're making available these tools and showing you how to use these tools to identify edges in the market and setups that you might want to trade in the future. So please be very disciplined in your approach to backtesting. You want to make sure you do it carefully. You want to make sure you do it thoroughly. You want to make sure that you test everything on a simulated account before you start trading on a live account. And when you do move from simulated trading to a live trading environment, you want to do so with limited size. Those are all just basic guidelines for being smart about applying your knowledge in the markets to your trading. And I'll cap that off by reminding you that these are tools, and tools are inanimate objects. They lie on the bench until they are picked up. And if they are picked up and put into the hands of a skilled technician, then they can do marvelous things. But if they are picked up and put into the hands of an untrained individual, they can cause great damage and harm. So take this seriously. Be intentional about your work and understand that you need to take the time to learn how to use the tool properly and effectively. I know you guys are eager to get started and see what these babies can do, but I also wanted to mention that this video does serve as the full and complete user manual for these indicators, and this is not really designed to be sales and marketing. I'm not trying to make a sales pitch here. My goal in this video is to show you how to adjust the various settings in the indicators to get the behavior that you are seeking to match with your existing strategies or come up with your own. But I do understand that many people will be viewing this video also to determine whether they want to purchase these indicators. So I'm going to take a little bit of time here. I'm going to show you where to locate them on our website, and I'm going to show you what's included in the indicator toolbox, and then we can get into the details. And for those who are viewing this video for the first time with the goal of trying to determine whether this is the right indicator package for you to buy, then what I've done is I prepared a list of questions, just 5 simple questions. I don't need the answers. I really don't care what the answers are. But these are questions for you to keep in mind throughout the course of the video. And if you can answer yes to 3 or more of these questions, then I would say that would probably help you determine whether or not this indicator package is going to benefit you. Okay, so let's just quickly review these. Do I believe that backtesting my setups will help me be a better trader? If you're not interested in backtesting, if you don't care about backtesting, if you don't want to analyze reports and test and optimize, then that's a no, right? But if that's a yes, then this indicator package might be for you. Number 2, do I have an existing chart strategy for backtesting, but it lacks a fully customizable exit strategy? If the answer to that question is yes, well then absolutely, this indicator package is specifically designed for you. Number 3, do I enjoy searching for new edges or optimizing my existing edges in the market? If that kind of thing turns you on, and I know traders are mostly geared towards finding the edges and finding the edges that no one else has identified, well, this indicator package is designed to do exactly that. Number 4, would having a clear view of my stop loss and profit targets help me execute my trades with greater efficiency? I think that's self-explanatory, and I know the gears are turning inside your head right now. So the idea is if you put it down on the chart and there's a fixed target and a fixed stop, and you've already backtested and you've already built the confidence and built the belief system on your trading setup based upon your own settings, then this will definitely help because it puts a clear line on the chart where to exit. And number 5, am I willing to put in the time and effort to perform exhaustive backtesting and analyze the results to find optimum parameters for my setups? This isn't for everyone. And you can utilize these tools even if number 5 is a solid no. But if number 5 is a yes, then this indicator toolbox can become an essential and important component of your work in backtesting and analyzing results and optimizing parameters for your particular setups. Okay, as I said, these are questions for you. I don't care about the answers. I want you to keep these questions in mind throughout the course of the video because I believe that they will help guide you into determining whether or not this indicator package would benefit you and whether or not you should make a purchase. So here we have our overview, and that's the section of the video that we're in now. Next, we're going to be covering where to find the indicator packages. We're going to be covering installation and setup. We're going to be covering the settings, and then we're going to demonstrate how the settings impact the behavior. And then we're going to show you some example charts and also conduct a live demo, which is really important because you need to see how you would manually enter each trade as the signals unfold on a live chart. Remember, in Thinkorswim, a chart strategy is never able to automatically execute trades. All of your trades have to be handled manually, but you need to understand how to read the signals as the chart is unfolding. Okay, so part of the overview is going to be discussing the common features. So let's go ahead and take a look at this. We've got custom chart strategies you can apply to nearly any existing or custom chart strategy on Thinkorswim. And I've already stated that at the beginning, but I wanted to put that in print. Automatically adapts to the entry signals generated by other chart strategies, which we've already seen in regards to the Bollinger Bands long entry strategy that we've already used as an example. You'll see many other examples along with that in this video. And then these are research tools designed to be flexible, adapting to individual preferences while avoiding analysis paralysis, which, to summarize, it means that I've tried to incorporate as many settings and adjustments to allow that flexibility without overloading you with so many settings and adjustments that you don't know what to do. Okay, so there's a balance there. Okay, there's some features that were omitted specifically because it would have just been overloaded. And also another common feature among all 5 of these indicators is that it includes special features tailored for intraday time frames. So yes, you can use this for swing trading. Yes, you can use this for intraday trading. You can use this for day trading. There's different techniques and adaptations that you can apply depending on if you're a scalper or a swing trader or a trend trader, or you like to fade moves. There's something for everybody here in this indicator toolbox. Okay, so where to find this indicator package on Hahn-Tech? We'll go to the website here. Okay, first thing is you go to the home page and you go to Premium Indicators, and then you select Thinkorswim Premium Trading Tools. That will take you to this page. And on this page are all of our premium indicators listed. And you've got screenshots here that you can go ahead and zoom into and see in detail so that you can get an overview before you watch the demo video. And that will help you to understand which ones that you want to invest your time in researching and evaluating for purchase. Okay, many of these indicators will include custom watch list columns and scans and other items. And if we get down here to the bottom, here is where you would find the particular package that we're dealing with in this video, which is the trailing stops and targets. It's a package. I call it a toolbox. And these screenshots here will show you each of the indicators being put to use on a chart. And what you get in this package, you get stops and targets exit, you get a trailing parabolic long exit and a trailing parabolic short exit, and you also get a trailing ATR long exit and a trailing ATR short exit. Those last two are kept separate between long and short because the code does not really work well when you try to combine them. The whole purpose of these is to split them out so that they are dedicated one direction or the other. Okay, you can combine 2 of them on the same chart, one long, one short, and adjust the settings. But this allows you the greatest level of flexibility by splitting these out. Okay, let's see. And these prices here are subject to change, especially at the first of the year. So, don't worry if you see that the order form has got a price other than what you see listed here. But here's the order form. And if you want to go down and purchase the trailing stops and targets, that's listed right here. And you just check that box. It gives you the total here. If you wanted to purchase other indicators, you can see that there's a discount schedule up here. Buy 2 or 3, get 10% off. Buy 4 to 5, get 20% off. Buy 6 or more, get 25% off of the subtotal. And so your discounts are automatically computed as you make your selections. And then when you get down here, in order to submit the form, you've got to agree to our privacy policy terms and conditions, and then your submit button is available, but only after you check that box. Okay, so we'll move on next. I want to show you some resources that are really important for people who are just learning how to do backtesting, or even for the seasoned investors who are already very familiar with backtesting. I've got some very helpful information here in our kitchen sink archive. Okay, so some things that I'll point out here are strategies, winning percent versus risk reward. We're going to be dipping into that a little bit here in the video. I've got a spreadsheet that shows you how to compute, what's your risk reward ratio and what's your win-loss rate. And it's a really complex computation, but I got a spreadsheet that kind of slices and dices those numbers for you. But it's really how you identify your edges on the chart and how you can help to maximize your profit while limiting your losses. That's really what it's about. If you have a high win rate, then you can afford to risk more. But if you have a low win rate, as most trading signals are, they only had maybe 1 out of 4 that are correct, then you have to make sure that your profit target is much greater than your risk. Okay, that's what that article explains. Then we've got some other things here on complex stop management, which really these indicators address the issues that were described in that article. And let's see, the other thing that I wanted to show you here is you want to go ahead and go to free tutorials, right? Thinkorswim tutorials. And on the left-hand navigation menu, you've got strategies. Okay, click on that, and that will take you to this page. And then if you want to learn about working with chart strategies and working with the strategy analysis. Okay, so you download the report and export it to a spreadsheet. Those are the first 3 videos listed in this menu on the left. Okay, so those are the resources I wanted to point out for you guys, because that's going to be very important that you understand all of this information before you purchase something like this and before you set off on your adventure in backtesting various strategies and setups. Okay, now let's go ahead and do a quick overview of each of the indicators so you can see that we have, and we'll revisit these. I'm not going to go over these in detail right now at this point in the video. I'll cover them as we get to them. We've got the trailing stops and targets package, okay, as a total. That's the 5 indicators. This one in particular is stops and target exits, and that's the one that we just viewed as a sample with the Bollinger Bands on the chart in the background here, okay? And so you'll be able to review these details, but we're going to cover them later on as we go through each one of these in detail. And then you've got the trailing parabolic long exit and the trailing parabolic short exit. Okay, those are these file names right here. Okay, that's how they will appear in Thinkorswim when you import them. And then you've got the 4th and 5th indicators are the trailing ATR long exit and the trailing ATR short exit. Okay, this is the summary view of those 2 indicators. And so next we're going to be covering installation and setup. And then after that, we're going to dig right into the charts and start looking at how to adjust the settings and see how the settings affect the behavior of each of these indicators. Installation and setup. I understand that most people are using Windows these days, so I want to use Windows as the example for how to install these indicators. When you purchase this particular trading toolbox, what you're going to end up with is a zip file, and that zip file is going to be downloaded and saved to your downloads folder on your Windows computer, or if you're on a Mac, most Mac users are able to use both operating systems. And so what you do then is you simply download this and save it to your hard drive. Okay, so there we are. We just clicked on it and it automatically downloaded, and you can see it now over here in our downloads folder. Okay, so we'll move to the downloads folder, and then what you're going to do next is you can probably just double click that to open it. You can hit extract all, okay, that button right up there. This is Windows 11, by the way. Or you can right click and select open. Okay, so you've got many different ways to unpack a zipped folder. What we do then is I'm just going to double click it, and here are our files. Okay, so what we're going to do is go ahead and copy these. Okay, I just highlighted all of them. I'm selecting copy. I'm going to go back, okay, because we can't import those when they're inside of the zipped folder. Okay, so what I did is I copied them, and now I'm going to paste them, okay, right here, and now they all appear. So these are each of those indicators. There's 5 in total. Okay, those are all the indicators that are included in this package that this video covers. Now I'm going to show you how to import those into Thinkorswim. Okay, so we're going to go ahead and move this over to the left a little bit, and then I've got Thinkorswim open down here. I'm going to open that up and then kind of slide that over to the side so you can still see those files. You don't have to do this, but I'm doing this to make it very clear so that you understand what you're doing. And then you can hit the flask icon or use any method that you normally use to access the Edit Studies window. There's a few different ways, I think maybe 4 different ways to get there. And depending on which file type you're trying to import, you need to adjust which tab you're on. See, right now you're on the Studies tab. If you're on the Studies tab and you try to import, you won't be able to identify any of these files because they're strategy files. So you have to change to the Strategies tab. Okay, see, I've changed to the Strategies tab. Now if I press the import, then I can go ahead and navigate to the Downloads folder, which in this case I have to go up 1, and then I have to double click on Downloads. Okay, and now you can see that these are the files that are listed over here on the left. Okay, I want to make sure that you can see how all that's connected together. We started from the email, we downloaded from the email, we had a compressed zip folder, and then from the compressed zip folder we opened it up, copied all the files, and pasted them back into the downloads folder. Now they're available here. Okay, notice that the compressed folder, trailing stops and targets, does not appear anywhere in this import list. Okay, and then all you do is select one and click open. Now I'm not going to do that because this file already exists, and there's no need for me to do that. But that's what you do, and you do each one of these individually, okay? I don't think that you can do multiples. Yes, you can. If you press and hold Shift and your mouse key, you can select multiples. Like I can click on the bottom one, I can click on the top one, and that should import all 5 of them in one step. Okay, so that's the installation, and once they are installed, then they will appear using the names as you see on my screens here during the rest of the video. Okay, so that covers the installation and import. And next we're going to be covering the settings overview. So we're going to be getting into the settings. We'll probably take the parabolic and the trailing stops in pairs because you've got a long exit and a short exit version of each of those. And so we'll kind of compress and save some time there because many of the settings are common between them. And so we're really going to have like basically 3 different sessions of settings overview, one for each of these unique indicator tools. And first up will be the stops and target exits, which is the study we've been examining so far in the overview section of the video. So you're already pretty familiar with the chart strategy, but now we're going to dig into the settings and all of the different features that are included. So before we get into the charts and look at the settings and start adjusting things, I want to go ahead and give you an overview. First thing to note is that it can be used for long or short exits. Okay, there's a switch where you can flip it one way or the other. You cannot do both at the same time. If you want both, then you'll add the same chart strategy to the chart twice and set one to long and one to short. And this study generates strategy exits for backtesting. And there are 1 permanent, which is the stop loss level, and 2 optional, which is the profit target and the trailing stop. You can turn those on or off, but the stop loss level is permanent. It also includes a second target option, but this is for display purposes only. Thinkorswim at this time does not permit scaling out of trades, so the second target cannot be used for strategy exits backtesting, but it can be used to display, and you can use it on your own for research to determine whether or not you want to scale out at a second profit target level. And we have some adjustable features. You got the ability to backtest long or short entries, as I've already described. And then you've got these 2 settings right here, number 2 and number 3. Okay, and if you look down here at number 5, you can see this explains that inputs for items 2 and 3 are included for all 3, the profit target, the stop loss, as well as the trailing stop. So each of those independently, you can adjust the offset and the quantity. And this will make more sense when we get into the settings and adjusting things, but you can set the offset to either an amount, a dollar amount, a percent, so a percent of current price, or ticks, number of ticks. And then you can adjust the quantity. So whatever value you enter for quantity is going to be applied to whatever option you select here for the offset, okay? Then you have an option here for exiting at either the target level or the first close beyond the target level. And don't worry if you don't understand exactly what that means. When I show you the example and adjust that setting, it will become very clear. Also, there is a feature that's available only for intraday charts, and that is flatten position at specified time. What you would use that for is if you want to backtest a strategy, but let's say you don't hold trades overnight. For instance, okay, you're a day trader and you open a position at some time during the trading session and you close it at some point during that same trading session. And if you don't get an exit signal, you close it anyway before the market regular session closes. We've got a feature for that so you can backtest that. And let's briefly discuss the intended use. This strategy is designed to help you identify optimum risk-reward ratio for any given entry strategy. So as I stated earlier, there's a spreadsheet that I've got. I'll bring into this discussion here after we review the settings. And you have your risk-reward ratio, which is what percent of loss versus what percent of gain. And you have to marry that through mathematical formula to what is your win rate. You know, how many wins do you get? Do you get 1 out of 4? Do you get 2 out of 4? So this will become a lot more clear once we get into the settings and start adjusting and manipulating the settings. And once the backtesting and optimizations are complete, you may use this on a live chart to manually place and manage your trade executions. So again, this is a tool, and the tool is designed to help you educate yourself about what are the optimum entries and exits for your own trading methodology. And this tool is flexible to allow you to adapt to your own trading methodology. And the idea being that once you identify entries and exits that you feel you want to test out in a simulated or a live market, then you go ahead and put this on your chart during a live market. And as new bars are added to the chart, the signals will show up, and then you will manually manage your orders for order execution. And that brings us right into the next bullet point, which is this is not an automated trading tool. All trades must be manually entered and managed. There's no way that Thinkorswim is able in its current form to use a chart strategy to automatically place trades. So you have to manually place your trades on Thinkorswim, but the tool is designed here to not only allow you to backtest, but also to walk forward. We call that a walk forward analysis, and place your trades in a simulated or a live market as you're going forward. I know I just repeated what I just said in the second one, but this is really, really important because some people are going to miss this important point. And now that we have completed that review, let's go ahead and dig right into the charts. I'm going to go ahead and select a different grid to start with, and I want to point out right off the bat here that we've got two strategies added to the chart. One is the topic of this video. One is the topic of another video. So don't get confused here. This, the one that I've highlighted in blue, is the chart strategy that we are specifically discussing in this video. This indicator happens to be another one of our premium indicator tools, and I put this up here on the chart because it also does entries for backtesting, and we can go ahead and use that as the entry, and then we'll use the subject of this video, stops and target exits, for the exits. I'll bring in a screenshot that I prepared ahead of time so that you can sort of get an overview on all of these indicators in this toolbox. In the cyan rectangle up here, you can see that you've got one input that is unique to this particular indicator on the left that is not shared among the others, and that is the ability to switch directions from long to short. And then the others are color coded. For instance, the magenta colored rectangles are showing those types of inputs that are used for fine tuning the metrics that are used to compute the various levels. And in yellow, we've got the settings that are common among at least the last two indicators, but also this first one here, we have the intraday flat time, and that is also shared among the other two indicators. So you can kind of see an overview of all the settings for all of these indicators. Okay, so let's get right into it and start working with the chart. So what I'm going to do first is I'm going to switch this from long to short. Right now, we're showing only long entries and long exits. So you can see histogram, long entry, double long entry, broken negative divergence. That's also a long entry. And we've got the exits here. You got the target LX here and here, and you've got a stop LX over here. So we're going to switch this around. So first I'm going to switch the divergence chart strategy from long to short. And then before I hit apply, I'm also going to do the same for the stops and targets. So I'll bring that back over here on the screen so you can see it clearly. So I'm going to switch trade direction from long to short. I'm going to leave everything else the same. I'll hit apply and watch how everything changes. Okay, so now instead of long entries and long exits, now we're looking at short entries and short exits. So you've got histogram short entry, and you got a broken positive divergence. That's a short entry. And then when it hits a stop, you've got the stop SX. Okay, and if it hits a profit target, that's a target SX. Okay, so that's what that setting does. And so you can clearly see that you want to make sure you use the correct setting, long for long, short for short. And if you're using both on the same chart, then you'll add it to the chart twice and set one to long and one to short. Okay, all right, so let's go ahead and apply that. So we put it back to the state it was in before we started, and then I'm going to show you the next setting. So we'll go over here and we'll change the apply target. Apply target, we'll change that to no. And the target, just so you know, is the cyan colored bold lines. Okay, those are the targets, profit targets. And so we'll go ahead and hit apply, and you'll see that those targets disappear. Now when the targets disappear, the only form of exit, given the current settings, is the stop loss. So there's no way for this strategy really to make any money, because it's always going to be exiting at a stop loss because you've turned off the targets. So let me go ahead and turn the target back on, and then we'll go ahead and review these settings here that affect the target, okay, the offset and the quantity. All right, let me go ahead and hit OK and hit apply, and then let's go ahead and zoom in. I'm going to cancel out of here. I'm going to zoom in on just a couple of signals here so we can see that more clearly. I'm going to move those over so that they're out of the way. I'm going to open up the settings again, and we're going to start manipulating this so you can see how these settings adjust and change. So for instance, right now the offset is set to %. That's the default. You can also set it to a dollar amount, or you can set it to a number of ticks. And so we're going to leave it at %. And so right now the target quantity is 4% above the entry. Okay, so entry plus 4%. So let's go ahead and increase that a little bit. Let's go ahead and increase it to 4.5. I don't want to go too far here at one step. Hit apply and watch the cyan colored lines. Okay, you see them increment up just slightly. Let me move that back down to 4, okay, and then hit apply. Okay, so you see that? Let me go ahead and make a bigger move now. This time I'm going to make it, let's make it 6%, okay? Hit apply. All right, so you see now how that profit target has gone up, and now it takes longer for that target to be hit. And then you can go ahead and let's try to increase that to 8. Let's see how far we can take this, right? There we go. You see that? But look at this. You see the red and the profit and loss? What that did is it took away some of the gains that we had booked in the previous historical part of the chart in order to gain an additional 2%. And let me go ahead and let you see the broad view of this so you can see how these changes impact the overall performance. Okay, this is not magic. Okay, this is not buy and sell and automatically make money. This is, you do the research, you test various settings, and you determine which settings work for your market and your setup. So let's drop that down to 7. Hit apply. Okay, not a big change there. Let's go ahead and hit that, make that 6. Okay, we'll make that 6. And now we can see we got some improvement there, right? So you've got now the ability to adjust that target. Now the stop loss is going to be adjusted in very much the same way. And if you wanted to change this, again, like I said, to a dollar amount, let's say, what is that dollar amount? We've got an entry here, and that is about, let's make this exact, right? And so we've got an entry here, that's 166, and that's one, so that's about 10, all right? So that's about 10. So let's go ahead and try to mimic that with a different setting for the offset target. So we're going to change that from % to amount, and we're going to change that to 10 for $10. Hit apply, and virtually no change, which is what we expected because we're using a dollar amount instead of a %. And the same thing works with ticks. I don't think I need to show that to you because I think this example was clear enough. We'll go ahead and put that back to 6%, hit apply, and let's go ahead and zoom back into these two signals here. And what I want to do is show you this next setting here, this target exit at level. Okay, so what we've got here then is the target exit at level. And so we'll go ahead and change this to close. Right now it's set to exit at the level. In terms of trading a live market, it would be like having a limit order at the target level, and as soon as the price trades up to and through that target level, closes out the trade at that profit. Now if you want to set it to target exits at close, then it's going to wait until the first bar that closes above the target level, and it's going to exit at the close of the bar. So we'll hit OK and then hit apply, so you can see how that's happened now. So what happened here is that previously this candle here that I'm marking with my mouse, previously that one poked up above and through the target but then closed below it. Okay, so when you change that setting and force it to wait until it closes above, then it's going to go ahead and execute here where you see at the close of this bar, which was the first bar that closed above the target line. But look what happened over here on the far right. That one fails to exit at the target and instead is forced to exit at the stop loss. So now you understand how that setting works, and you need to be aware of the fact that you may change one thing to gain an advantage in one signal, and then you lose that advantage in another signal. This is part of backtesting and research, and that's what this tool is designed to do, to be flexible enough to allow you to do this research. We'll hit apply and set that back to the way it was so that we can go ahead and examine the next level, which is the stop. So the offset stop is set to percent and the quantity is set to 2. So that's 2% below the entry. So let's go ahead and adjust that down to 4. Let's just say we want to adjust that to 4. We're expecting the magenta colored lines to drop lower on the chart when we hit apply, and they do. So we'll go ahead and push that back up. It was a value of 2, so let's try a value of 1.5, see if we can get it to trigger. And yes, we do. You see, so here we get it to trigger the stop right here instead of hitting the target. And as a result, you can see that sometimes when you try to reduce the amount of your risk, you can sometimes end up with a loss instead of a profit. Let's go ahead and set this back to 2, so we're back to our original state. And what I want to do is also do the same setting here for the offset stop. I'm going to change it from percent to amount, just like we did with the offset target. So now the offset stop is set to amount, and we had the other set for $10. And let's go ahead and set this one to 5, okay? And it's just going to be $5 below the entry. So this one here is roughly 148. So we're expecting the magenta line here on this signal to come down to about 143 if we hit apply. And yeah, that's where we're at, right about 143. So that's how that setting is adjusted. I'm going to put that back to percent to restore the original conditions. Go ahead and hit apply. And now I want to show you how to turn on the trailing stop loss. So that would be apply trailing stop. It's default set to no. Turn it to yes. I'll tell you, it'll take a little bit of practice. It's not quite intuitive until you get to work with it a little bit. It trails pretty quickly. It tracks the high of the price action. And so as the stock continues to make higher highs, it rapidly follows that price action. So you don't want to set it too close. It's not there to be the initial stop loss. So you actually want to set it below the initial stop loss. So what we want to do is increase this value. We probably want it to be somewhere between 3 and 5% given our current setup here. But I'm going to start with 3 so you can see how it works. The stop amount is set at 2%. So the stop loss is at 2%. We're starting the trailing stop at 3%, which is just 1% below that. So I'll hit apply. So you can see how tight that is and how quickly it ratchets up and takes that out before it hits the target. Okay, so you don't want it to be too close. Okay, so let's go ahead and make 2 adjustments this time. Number 1, I'm going to increase the profit target so that it doesn't get triggered on this bar for this second signal here. Okay, and then I'm going to give it a little bit more breathing room. I'm going to lower this trailing stop down, maybe make it 4% instead of 3. So we're going to go ahead and increase the target to 7. Let me just look at that and see how that works out. Yep, good. That's exactly what I wanted. And I hope that it will still trigger here, but maybe not. We'll see. And then what I want to do is increase this. So we're going to increase it to 4%. Okay, this is the trailing stop that I'm changing now. So we hit OK and apply. And so now you can see it gives it a little bit more breathing room, right? So it's trailing. So it starts out below the stop loss, but quickly ratchets up and above the trailing stop loss. This is the kind of behavior that you want to shoot for when you're trying to dial this in and optimize this. Okay, and so you can see how quickly it is reacting to the price action, and in this case the target is hit before the trailing stop loss. But over here in the second signal, you can see that even though we had our target set beyond the reach of that high of that candle, it was still able to take a profit from this trade via the trailing stop. And the trailing stop works exactly the same in the opposite direction for short side. And again, you have the same type of settings. You can set the trail stop quantity to amount, percent, or ticks. It defaults to percent. And we've already demonstrated on that on the other 2 settings, so I don't think we need to do it now. Let's go ahead and turn that off so we return it back to its previous state. And I'll adjust that back to 6 as well and hit apply. And then let's go ahead and get back into the settings. And so we only have a couple more left here. You have display target 2. All right, it's default set to no. We're going to turn it to on. Right now, target 2 is set at 1.5. When you have that value, the target 2 multiplier set to 1.5, what it's doing is it's tagging this value here. So it's whatever amount this is times 1.5. So if it's 6, so you take 6 times 1.5, you end up with 9. So this second target is 9% above the entry, whereas the actual target that is executed on the strategy itself is set at 6%. Okay, so that's how that works. So next, we're going to have to go to an intraday chart to look at the intraday flat time setting. We'll cancel out of here, and we'll go to the next chart grid. This is another premium indicator that we've got listed on our website. This one here is the swing pivot trend rotations. That's another indicator that is not included in this package, but I'm including it in the demonstration for the stops and target exits because it will help you to see how this stops and target exit is designed to automatically adapt to virtually any other chart strategy. All you need to do is provide a chart strategy that gives you the entry signals, and the stops and target exit strategy will handle the exits and allow you to fine-tune that and optimize it. So let's go ahead and change this to an intraday time frame. I'll go ahead and cancel this. Okay, so we'll go ahead and set this to 15-minute, and you can see that it's already active. You see this yellow order right here, timeout LX. Okay, so that's how that works. Let's go ahead and go into the settings here, and I'll show you how to turn that off. So it's automatically active. So anytime you set your chart to intraday, it's automatically going to be active. The way you turn off the intraday flat time, in other words, allow the trade to be held overnight in your chart strategy backtesting, is to set this to 0. So you set it to 0, we'll hit OK and apply. So that's your intraday flatten setting. I'll go ahead and turn this back on again from the stops and target exits. I'm going to leave it off from the other strategy so that you can see that it is only operating now from the stops and targets exits. So we'll hit OK and apply, and you can see that it's back on. And then you can adjust the time too. So let's say you wanted to exit earlier than that. For instance, let's take a look at this one right here. You see this one right here is exiting at 14:45. So if we change that setting to maybe 14:30, then we would expect that order to be replaced by a timeout LX. So let's go ahead and open up the study settings and make that adjustment. So instead of 15:45, we want it to be 14:30. Okay, and now watch right here where it says minor LX. Okay, we're going to go ahead and hit OK, and then when we hit apply, we see that now it's timed out. So it times out before it hits that regular exit signal driven by the other chart strategy. So you can see this stops and targets exit strategy is designed to fully integrate with virtually any other chart strategy that you can add to the chart. They just blend together. The only thing you need to be careful about is understanding how the settings impact the behavior of all of your chart strategies, because they're modular. They're designed to be combined together on the same chart, but you need to be aware of how the settings are affecting the behavior. You need to learn, you need to practice, you need to be intentional. Okay, this is a heads up. You need to be very careful about learning and practicing and really honing your skills on how to use these tools. Okay, so now we go back to the settings and we find out that we have completed the review of the settings for the stops and target exits. What I would like to do before we move on to the next chart strategy in this trading toolbox is I want to review some other charts. Let's go to the next grid. This one here is another one that we've got on our website for sale. This is standard deviation reversals. This is an entirely different chart strategy altogether. It's available separately on our website, but again, I'm only displaying it here because you can see how it automatically adapts and integrates with the stops and targets exit so that you can use them together. So you can see the targets are being hit and executing, and the stops are being hit and executing, and you can adjust all the settings just the same as everything I've demonstrated you up to this point, and it'll automatically adapt to this other chart strategy as well. And on this final screenshot here, we're right back to where we started. And on this one, what I'm going to do is I'm going to bring in maybe just about three more chart strategies that are included with Thinkorswim, just so you can see how this automatically adapts. So let's go ahead and do that. I'm going to go ahead and edit the studies. I'm going to remove the Bollinger Bands LE. LE stands for long entry, by the way. So Bollinger Band's long entry, I'm going to eliminate that from the chart. And then I'm going to go ahead and go to strategies. And I'm going to look for one called key reversal. I'm going to add that. Now, this one here is your long entry. There's also a long exit. But remember, our stops and exits is automatically handling the exits. So all we need to do is add a strategy that handles the entries, which is this one. So I'll go ahead and add that in there. Use the default settings. We'll hit apply and OK. And you can see that there's your key reversal long entry signal. And the trailing stops have been turned on here. And it'll hit the target and exit at target, or it will hit the trailing stop, or it will hit the stop loss. It automatically integrates with this chart strategy that we pulled from Thinkorswim. And let's see, in addition to this one, I also want to show you one that's called Momentum LE. So that's another long entry strategy that's included with Thinkorswim. It's built in. And I'm going to add that in there and combine that with our stops and targets exits. I'm not going to make any changes to any of the settings. We're going to hit apply and OK. And again, you can see the Momentum LE is handling the entries, okay? And then our stops and exits strategy is handling all of the exits. And I've got one more that I want to include here, and that is the spectrum bars. I'm going to add that in. I'm going to remove the momentum, and then I'm going to hit apply and OK. And so here's the other one. So you got spectrum bars LE. Again, that's another built-in chart strategy that's included with Thinkorswim, and it will automatically integrate with our stops and targets exit chart strategy for backtesting your exit strategies. And you can look at all these strategies that are already built in. Anything that you see with the lock symbol next to the script icon, okay, that is going to be the built-in chart strategies that come with Thinkorswim. There's a lot of them. I mean, there is a lot. Okay, so you can pick and choose. Virtually any of these are going to be compatible with this stops and targets exits, including any of the custom strategies you might be using. I'll give you an example. We have on our website an entire category for strategies, and we've got two strategies posted on our website. One is the Ichimoku, and the other is the multi-time frame MACD. Let's go ahead and take a quick look at those before we move on to the next indicator and review its settings. Okay, so I've just removed the previous strategy from the chart, and I've added the strategy Ichimoku. We'll hit apply and OK, and you can see here that the Ichimoku strategy is providing some exits too. Look at that. So the Ichimoku strategy from our website includes a parabolic SAR. So let's go ahead and turn that off, okay, because we want our exits to be handled solely by the stops and targets strategy. So let's go ahead and disable the sell orders. Okay, so we're going to disable that. That's another sell order. Disable that. And so all we've got open are the, let's see, buy to close. We're going to turn that off. Okay, so really all we want is this one buy to open. Okay, so hit apply and OK. So now we can see that we've updated the Ichimoku chart strategy to disallow exits that it automatically contains, and now we allow the stops and target exits strategy to handle the exits. Let's go ahead and examine the other one, which was the multi-time frame MACD, and that handles long entries. Let's just review these settings very quickly here. This is a daily chart, so using a weekly and a monthly, that's good. Okay. And if we look at orders, we only have the one order. It's a buy order. Buy auto, that's okay. Yep. So we'll hit apply and OK. And there we have it. So now this is multi-time frame MACD long entry. You can see right here. And then you can see it hits the target. And then there's another entry right here, but that one hits the stop loss. And then this signal over here, you got the multi-time frame MACD long entry, and you've got the target being hit here. Now, don't panic that the profit and loss screen is blank. There's a known glitch in Thinkorswim. It's a little bit of a bug in that when you have a multi-time frame chart strategy, the profit and loss screen will sometimes disappear on you, and sometimes it takes a little bit of work to get it to come back. That's just one of the downsides to working with multi-time frame strategies. I try to avoid it. I try to limit that as much as possible because it's not fully supported. It's got some glitches. Okay, and that pretty much concludes all of the settings we wanted to review for this particular element of the indicator toolbox. And I do want to go ahead and show you the spreadsheet that I created for helping you understand how the risk reward and the win-loss ratio are impacting the level of risk and the level of reward that you can apply for your trades. I'm going to have to be very brief because this could be a topic of an entire video in and of itself, but I wanted to at least expose you to this so that you understand. I've got two tables here. One is adjustable risk, the other is adjustable reward, and here you have your wins and losses. Okay, so you enter values here, wins and losses, and it will automatically compute your win-loss ratio, your win rate percent, and then it will automatically compute what reward you need based upon the risk that you enter. Okay, and then that will tell you how to get to break even. Now, if you understand that, I'm surprised. So let me state this another way. What this is saying is that if you have 5 winning trades and 10 losing trades for a total of 15 trades total, okay? So you've got 1/3 of your trades are losers and 2/3 of your trades are winners. Your profit has got to be double your risk, okay? Risk 1, gain 2. Got it? Now, this one is probably the one that's most intuitive, and that is an equal amount of wins and losses. You're 50-50. You're right 50% of the time. Out of 20 trades, you win 10, you lose 10. That means if you want to break even at least, you've got to gain at least 1 for every 1 that you risk. Starting to make more sense now? Okay. And then on the second table down here, you've got a different way. It's just the same table, same math, but you get to adjust the reward instead of the risk. So this one tells you that on that same strategy we just looked at, where you have 20 trades, half of them are wins and half are losses. If you risk 1, you've got to gain 1. And vice versa on the one above it. Out of 15 trades, if you win 5 and lose 10, for every 1 that you gain in profit, you're only allowed to risk half. Okay? Now, how does this translate to the chart? I hope I haven't lost you guys here. Bear with me. I did warn you that this topic would be sufficient to cover an entire video in and of itself. And if there's a broad interest in this and people leave comments and ask for more coverage on this and more understanding, by all means, I'll teach it. So here's an example, okay? We've got how many trades? 1, 2, 3, 4, 5 trades. So out of 5 trades, how many are wins? That's a win. That's 1 and 2. All right, so we've got 2 winners, 3 losers. And how much are we risking in order to attain that? We look at our risk. Our risk is 4%. So we enter 4%, and that tells us that if we want to break even with this strategy, and by all means, let me help you understand this, okay? The risk is really the factor that's telling you your win-loss ratio, okay? The amount you risk, okay, your level of stop loss is really the part that's driving how many wins, how many losses, okay? Because if you tighten that up, you're going to have more losses. If you loosen it up, in other words, if you take a bigger risk, you're going to have more wins, potentially, okay? So there's a lot of dynamics going on here. But the idea is, with this spreadsheet, it helps you understand that out of 5 trades, if I have 2 winners and 3 losers, if I'm risking 4, I need to make at least 6% profit on each. If I have my setup, okay, set for 5% profit, okay, and I'm risking 4, this strategy will lose money, okay? The only way I can make money with this strategy, okay, in the long run, is to have at least 6 reward for every 4 risk. And so what do we have here on the strategy? On the strategy, we are going for 12% profit. So we are well above the break-even point. And if you understand that, I've explained it correctly and you've absorbed it correctly. It's a really complicated subject, but I'm telling you, this tool that we've got here between the spreadsheet and this stops and exits, where you get to adjust your profit and risk, okay? And then you get to do the analysis and say, okay, what's my win-loss ratio? How many winning trades? How many losing trades? Plug that into the spreadsheet. Oh, now I know exactly where my break-even point is, and I need to make sure that I'm making much more than that profit that gets me to break even. And again, with the other table, you do everything inverted, okay? If, for instance, your limiting factor is your reward, I can only make 1%. I can only make 1% in order to achieve this win-loss ratio. Well, then this will tell you how much you have to risk in order to break even. And then if you risk less, you're in a profit, okay? So hopefully that explained it well enough that you understand and you're not totally baffled or confused. I'm sorry, it is not an easy topic to understand or grasp, and I'm doing the best I can to teach it to the broadest audience possible, so as many people as possible can understand and comprehend that. We're about ready to move on to the next tool in this toolbox, so let's go ahead and review the questions. These questions were posted earlier in the video, and they are intended to be rhetorical questions that you keep in mind while you're reviewing the video. These questions are designed to help guide you into deciding whether or not this indicator package, this toolbox, is right for you. Okay, so in the next stage of the video, we're going to be discussing the settings for the trailing parabolic LX and trailing parabolic SX. Those are the next two tools from our trading toolbox that we're going to be covering. We're going to be looking at the settings. We're going to be basically going through the same thing we just did with the stops and targets exits, but this should go much more quickly because you've already got down the basics, and so I can move much faster. We're going to be reviewing these details, and then we're going to get right into the charts, and I'm going to be walking you through examples. So we have two files in this section. One is for the long exits, one is for the short exits, and this is for the parabolic stops. LX stands for long exits, SX stands for short exits. That way you can tell them apart when you're looking at the file names as they appear in Thinkorswim. Each of these will generate strategy exits at a trailing stop that you can use for backtesting. The trailing stop is based on a parabolic SAR. Many of you are familiar with this indicator as it is a built-in indicator in Thinkorswim. I have created a version that computes similar trailing stops but isolates the trailing stops between long and short. And as I continue on with the examples and the demonstration, you will see that what I've done here is to improve upon the existing indicator and make it much more adaptable to fit with other chart strategies. And one of the ways that it is improved upon the original is that this one will always remain on the same side as the strategy entries. In other words, you load a long entry strategy on your chart and you add the trailing parabolic LX to your chart. The trailing parabolic LX is always going to be on the correct side of your long entry strategy, and vice versa for the short side. Therefore, it is always in the correct orientation to trail the entries generated by other chart strategies. I'm going to show you an example of this in which if you tried to use the standard built-in parabolic stop and reverse strategy, then you would wind up with having entries that are immediately stopped out because they're on the wrong side of the parabolic stop and reverse. The trailing stop dots are color-coded to show the trend strength, and I'll explain that when we get into the examples. You can apply these together with the LX and the SX and adjust to perform as a stop and reverse strategy. And I'll show you an example of that as well. And some of the adjustable features. All standard user inputs are included just as they are with the parabolic SAR. Okay, and there's another setting in here for adjustment that is called trade size, and you can adjust this by shares or account equity. And I'll explain that, but it'll be easier when we get into the charts and I demonstrate it for you. You can set it to shares and adjust the trade shares to the desired quantity. If you set it to equity, you must adjust your account equity and percent of equity according to your preferences. It does not automatically read your account equity. Thinkorswim does not have that functionality available. And why would we need to include a user input to adjust the trade size for an exit strategy? Well, that's because this exit strategy also includes optional entries. So these two tools can actually be used as a standalone chart strategy. They will handle entries and exits if you enable the entries from the user inputs. I'll demonstrate that in the next section. And for intraday charts only, we have the ability to adjust the trading hours start and end time. Again, because it does include optional entry signals. Okay, then we also allow for an adjustment of the trading hours for intraday time. So for example, if you have your charts set up to include extended hours trading, but you want to perform your back tests for a specific time period during the regular session only, there are settings available that allow you to do that. And as we saw in the previous trading tool, we've got this setting called Adjust Flatten Position Time, and it will force the strategy to post an exit before the end of the trading session, or whatever time it is that you have set for that input. Now I'll just briefly cover the intended use. You can combine this with any other chart strategy to test and optimize trailing stop exits. You may also use it as a standalone chart strategy to backtest entries and exits based solely on the parabolic trailing stop. Once the backtesting and optimizations are complete, you may use this on a live chart to manually place and manage your trades. And a reminder that this is not an automated trading tool. All trades must be manually entered and managed. This is simply a tool that is intended for you to test various settings and methods for your exit strategies, and then show on your chart exactly where to place those orders while you're watching the chart play out on a live chart. Okay, so let's switch over to the view that I've prepared for the trailing parabolic stop. There we have it. And let me bring in this overview of the settings. And you've seen this before, I've shown it previously. I'm going to go ahead and put a line here, or just a horizontal line, and try to make that stand out here a little bit. And so I just want to show you that we have on the left here, we've got the trailing ATR, and on the right, we've got the trailing parabolic LX. Okay, so I wanted to show you that for all of these settings here, I'll just take them one at a time here while I'm talking, that we have exactly the same user inputs available on each. One is based on an ATR trailing stop, and the one that we're focused on now is the one on the right, which is based on a parabolic trailing stop. Okay, so I want to explain this to you because while we're going over the trailing parabolic stop, we're going to be going into each of these settings highlighted in yellow in detail. When we get to the ATR trailing stop, I'm going to move much more quickly to save time in the video because we've already covered all of these settings, and you should be able to understand how each of these settings is going to impact the behavior between these two. But we will be covering in detail for each separate indicator the settings marked in the magenta rectangles here, okay, because those settings are specific to each indicator, and you want to make sure that you understand how these settings affect the behavior. All right, so we'll pull that off to the side here. Let's go ahead and maximize this first chart, and we can start digging into these settings. We'll open up the Edit Studies window, and just as we did with the previous trading tool, I'm using one of our premium indicators available on our website separately from this package, and that is just to demonstrate the entries. So on this chart, I've got the Standard Divergence MACD X2 version 4, which is an upgrade that is being released at the same time as this video is being published, and we're using the trailing parabolic LX as the exit strategy. Okay, but in order to demonstrate the very first setting in the list, I'm going to go ahead and remove this Standard Divergence MACD X2 indicator from the chart. Hit apply. So now all of our entries and exits have disappeared, and then we're going to enable the long entries for the parabolic LX indicator. I'll hit apply and OK. All right. So now you've got a standalone parabolic LX handling both the entries and the exits and based solely upon the parabolic trailing stop. And now I want to go ahead and demonstrate the first setting, which is the shares. So you've got it set to shares. You've also have an option to change it to equity. So for now, we'll just look at number of shares, and I want to go ahead and change that value down to 50. And I want to point out on the chart over here, you can see wherever it says PARLE, that stands for parabolic long entry, you've got a value of 100, so that's 100 shares for each entry. I've updated the value of that setting to 50. Now I'm going to hit OK and apply, and you can see that those values now are showing 50 for each entry point. Let me go ahead and set that back. And now we go ahead and select equity, because I want to show you how the account equity is going to be determining the trade size. So what do we have for account equity? The default value is 10,000. Percent of equity is 10, which gives us a total value for each trade of 1,000. And what the code is going to do is it's going to take what is the current share price at the time of entry and try to fit as many shares as possible into that $1,000. I'm going to hit OK and then apply. And you can see now you've got a value of 8 down here, a value of 7 here, changes to 6 up here because the price is higher. And then as the price goes down, you see the values increase again to 7. All right, so we'll go ahead and set all that back to the way it was, shares, and that's ready to go. And in order to demonstrate the next 4 settings, we're going to pretty much leave things the way they are. It's the only chart strategy on the chart, so the Parabolic LX is going to be handling both the entries and the exits, and that will allow us to adjust these settings and see them in action on the chart. So let's go ahead and hit OK and apply, and then I'll go ahead and update the time frame on the chart. I want to go ahead and change that to 15 minute and maybe put in 15 days worth of time. There we go. All right, and then we want to zoom in on a couple of sections here that I think are going to help us identify how these settings work. Okay, so you've got an entry here. So 10 a.m. is that trade. That trade is 10:30. I'm just looking at the timestamps on these trades. Okay, so if I set it to 10, then we should see some of these disappear. Okay, so let's go ahead and mark those. So those two should be removed from the chart if we turn on this setting. So let's go over here to the settings. Change apply trading hours from no to yes. And notice that we already have the time is set for 10 o'clock to 1500 hours. Okay. And these time frames are based on whatever is set on your chart. So whatever time zone you have your chart set to, that's the times that you want to use here for these settings. We'll hit OK and then apply. And you can see that those 2 trades are now gone that I marked with these vertical yellow lines. Okay. We'll go ahead and turn those back on by changing the time. Okay, so now we're going to adjust the time. I'm going to set it to 9:30 so it allows entry as early as the very first bar of the regular trading session. You see that I've got that set to 9:30 now. I'm going to hit apply, and then you see those trades then show up again. Okay, so also we want to see if we can make one of these trades at the end disappear. So let me go ahead and there we go. So these 2 trades should be impacted by the next change that I plan to make, which is I'm going to cut off the trading at 1400 hours. Okay, so now we have our intraday trading end. It defaults to 1500 hours. Now I can go ahead and set it to 1400 hours and watch what happens at those 2 places I marked with those yellow vertical lines. There we go. So those trades have now stopped. Now that doesn't mean that we exit, okay, at 1400 hours. Okay, that means that we no longer allow new entries after 1400 hours. So these 2 settings here are controlling entries. We only allow entries to occur within the start and end time as long as apply trading hours is set to yes. We turn it to no, then those times don't do anything. They have 0 impact on anything. Okay. Then we also have the intraday flat time, which is going to force an exit of any open positions by the end of trading. Right now it's set to 1545. So let's go ahead and take a look at our chart. So this section of the chart, we've got 3 of these. So now we can manipulate this. Okay. So number 1, what we can do is we go to settings, move this aside here, and then we can go ahead and turn off the intraday flat time altogether by setting it to 0. And then the timeout LXs will disappear from the chart. We'll hit apply and watch them go away. Okay, so now instead of forcing an exit before the end of the regular session, it allows the position to be held overnight in the form of back testing your signals. So then we can also go ahead and change this time to an earlier time. So I'm going to change it back to 1545. Okay, so you can see where they're at now, and then I'm gonna slowly update this value. I'm going to take it down to 1530. Watch what happens to the timeout LX. See, it moves 1 bar earlier. Some of you probably anticipated that, but I'm doing this for the benefit of those who are struggling to understand how this works. So I'm going to change it. I'm going to back it up another 15 minutes. So watch it. Those timeout LXs should move 1 more bar to the left. Okay, you see that? And if you look at the timestamp on those bars are timestamped 15:15. Okay, it's 3:15 p.m. All right, let's go ahead and get our chart back to original conditions. I'm not going to bother changing those hours, but I'm going to turn off the apply trading hours because we're done with that. I do want to go ahead and explain to you the display trend legend. So you see these colors up here: cyan, bullish; magenta, bearish; yellow, caution; red, danger. Let me explain those, okay? And you can turn those off right here. If you don't want to see them, then you can hit OK and you can hit apply, and they're gone, okay? We're going to go ahead and leave those on for the demonstration here. We'll hit apply and OK. And then I want to zero in on this little section right here. Does a really, really good job, okay? I think that gives us a really crystal clear view of this, okay? So now, bullish is cyan, right? So you see these cyan colored dots, boom, 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 boom. It turns yellow. What's yellow? Yellow is caution, okay? And then it turns from yellow to red, 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 and then finally turns back to blue, which is bullish, okay? So it goes from bullish to caution to danger, back to bullish, a couple of cautions up over here. Now let me explain. It's real simple. There's no magic here. It's as simple as this. The price is not making new highs, okay? The closing price is not making new highs. And that's why you've got these red. And what happens, though, it also tracks the previous high, okay? So what's happening here is that even though the price starts going higher over here, these bars right here, it still stays red. That's because we have not yet eclipsed the previous high right there, okay? So as soon as we do, we cross above that, now it changes back to bullish. So it's just a handy little guide to kind of tell you which direction the price is moving, and I'll leave that to you to examine on your own when you buy this indicator to determine if those trend colors of those trailing stop dots are useful for other reasons. For instance, you may decide to start scaling out of your trade as soon as you get a series of red, or you might decide to double up. Who knows? I mean, there's no rules in the market. You get to make up your own rules, and the tool is designed to allow you to do that, to understand what the rules are and to manipulate the rules on your chart and see them in action, and then make a decision on how to go forward. So the last thing we want to do is go ahead and look at these other settings down here in the bottom that are controlling the behavior of the trailing stop itself. Okay, we're going to be looking at these different settings and looking at how they all change the behavior and the complexion of the chart. But before we do that, I want to get into those couple of other items that I promised that I would show you. One is that we can apply this together to create a stop and reverse strategy. So let's go ahead and cover that next. Really, you can do it with just one of these. You don't need both. And all you do is you change the orders here for the exit, change that to auto, so it will sell auto. And you do the same thing with the long entry signal. Hit auto, okay? So basically it goes long until it gets a short signal, and then it closes the long and goes short on the same bar until it gets another long signal, and vice versa, and it's always in a position, okay? Stop and reverse. And the other component that we need to that, so in addition to changing both of these order types to auto, okay, the other thing that we do is we make sure that we allow long entries, okay, and vice versa for the short side. And the other detail we need to do is remove the intraday flat time, okay? That timeout LX was up there, okay, so we hit apply and okay. So now what we're doing is, you see here, you go for the yellow, parabolic long entry, so that's plus 100. Then we get to an exit, so you see the parabolic LX minus 100. So right there at that point, what it's doing is it's closing out the long position of 100 shares, and it's opening a new position, short. And then it goes long, and then it goes short, and it goes long, short, all the way through the chart. We can zoom out here to see how it does, and in this particular case, it's not doing very well. But as I said, this is merely a tool, and it's designed with the flexibility in mind to allow you to identify your own edges and your own methodologies and backtest them and optimize them as you see fit. And the other detail I promised that I would show you is comparison of this to the regular parabolic stop and reverse. So for that, I'm going to rearrange the chart. Okay, so what I've done now is I've added the standard divergence indicator back on. That is going to give us our entry signals. And I've also added the regular parabolic SAR indicator to the chart. And that you will see are these light colored red dots, okay? And so what happens here with that type of indicator, you can see where the divergence indicator would trigger a long entry. Right here, you see that. Let me zoom in right there. That's probably best. I just zoom right in. Okay, you see the dark green and the light green arrows here? Those would be long entries for this divergence strategy. Okay, but the standard parabolic stop and reverse is on the short side. Okay, you see those red dots up here coming down? So the parabolic that comes with Thinkorswim would be short at the same time you're trying to enter long with the divergence, because divergence, that's the very nature of divergence, is trying to catch those trend reversals. And so almost all of your divergence entries are going to be opposing the standard form of parabolic. So that's why I created these parabolic strategies, so that they would be able to automatically adapt to work with any long entry signal or any short entry signal. So we'll go ahead and update the indicator here. So I've got to update these order types here. Remember, I changed those to auto, and I'm going to change them back to where they were. That's open and that's closed. So I've changed those back to where they were. Hit apply and OK. So now you can see our parabolic long exit is triggering here, and you can see what's happening. Let me scroll up a little bit here. Okay, so at the same point where the standard parabolic, these red dots, is short, the parabolic LX strategy automatically resets. So it automatically resets every time the indicator is in a position to form a new entry point. So it's always long and it's always on the right side. It's never contradicting the existing chart strategy, so long as you match them up, long for long, short for short. Okay, so that was really the genesis. The reason why I created this is because I saw that there was a lack, there was a void that needed to be filled, and I think this is going to be very useful, very helpful, especially for people who are huge fans of parabolic stop and reverse. And so now let's go ahead and get on to adjusting the settings. I'm going to clean up the chart again. Okay, and I think a section of chart like this, right here to the right, where you've got that nice big long run right there, I think that will be a very good example to use for adjusting these settings, so you can see how these settings impact the way that the indicator trails the price action. So we'll go ahead and set that up this way, and then now I can go ahead and focus on the settings, and you guys can see exactly how each of these settings impact the behavior. So what happens if we change the acceleration factor? Okay, so we go ahead and change this value. Let's go ahead and change it to something like from 0.02 to 0.03. We'll hit apply. Very little change there. You can see that that setting doesn't have a huge impact on the indicator. Change it to a 0.05. Now I saw a little bit of a change right here in the middle. The dots are moving a little bit closer to the price action. Okay, so for my own experience, this is the one that I have found makes the biggest impact on the behavior, and I've actually adjusted this. The default value is 0.2 for the acceleration limit, and so I'll set it back to that and hit apply, and you can see now that this long trade here is now broken up, because the trailing stop trailed the price action very tight and took it out for a profit here and took it out for a profit here, and it broke that run up into several trades. There's actually 3 trades now instead of 1. And so what I did is I backed it out by changing it to a 0.1, and that allowed a little bit more breathing room for the price action. And then the other adjustment you can make here is the ATR length. Let's see, the standard value would be a 14. Let's see how that works. That makes a very, very subtle difference. So you get to play around with these settings yourself and determine which ones work best for you. And right now you can see that there's 2 of these settings are very subtle in their action. So let's go ahead and set that back to 5, and then let's go ahead and change the ATR multiplier. Okay, let's change it to 2. Okay, that made a pretty big change right there. And then you can also change the moving average type. Okay, we can change it from a Wilder's to an exponential. Wow, look at that. Kind of stumbled into that one, didn't I? So there you go. You've got all the settings that are standard with the parabolic SAR, and you get to adjust them and experiment as you like and determine which ones are going to work best for you. Some are going to be better, some are going to be worse. It all depends on your particular goals and what instrument you're trading. Okay, so we're very near the end of the video because we've only got one set of indicator tools left, but I want to go ahead and flip through a few of these screenshots here to show you that the parabolic stop and reverse is also working with other chart strategies. So just as I did with the first trading tool. I want to show you that this one also works with the swing pivot trend rotations indicator. That's also another premium indicator that's available separately on our website. And you can see that the trailing parabolic LX works with that as well. And we'll go over here to this chart and show you that with the standard deviation reversals premium indicator, also available separately on our website, that the trailing parabolic LX also automatically adapts. And we want to go over here and examine some of the built-in chart strategies that come with Thinkorswim and see how they are also integrating with this trailing parabolic stop indicator. You can see this is the Bollinger Band LE, and we might want to go ahead and try a short side for this. So let's look at the Bollinger, and we find a short entry here. So I'm going to swap out the LE for the SE. Okay, so now the Bollinger Band SE is going to do the short entries, and then we take the trailing parabolic off, okay, because it only does long, and then we take the trailing parabolic SX, okay, that's trailing parabolic SX, and we're just going to leave all the settings default, okay, and then there you go. So you've got an entry here and an exit very soon after. Apparently this for the short side, the Bollinger Band short entry and the trailing parabolic is not a very good pair, but you could also try a different stock to see how it looks there. Okay, with Amazon it seems to have done a little bit better, so maybe the short side was a little bit more profitable on Amazon versus Apple during the same time period. And we'll go ahead and take a look at some of the other strategies that I wanted to match up with this. Okay, so we're long for long here, so you can see how it integrates automatically. You see how let's zoom in on that, right? So you see right here, you see the key reversal. Key reversal is in a reset mode right here, and that's what those pink squares are. The pink squares are the resets. So what's happening here, and this is a good point to bring up, the multicolored blue dots, that's your trailing stop. Wherever you see a pink square, it's actually magenta colored square. That's the reset. That's when the trailing indicator is actually in a reset mode. And so what happens is, even if you have an entry that is triggered on one of those pink squares, on one of those magenta colored squares, it's perfectly suited for that type of chart strategy. So even though it's in a reset mode, on the very next bar it picks it up and runs with it. And I'm going to take off the key reversal, put on the momentum, go ahead and expand that and take a look at it. And once again, as I explained, that the trailing parabolic LX is automatically adapting to whatever chart strategy you add to the chart. So we're going to go ahead and take a look at one more here. Take that off. There you go. And let's see, then we're going to go ahead and let's do the Ichimoku. So there we go. And then let's see, one last one. We'll look at the MACD multi-time frame. And there we go. So we don't get the profit and loss curve on the bottom, but that's again a glitch that I explained to you in the previous trading tool. Okay, so we're done with this indicator in particular. Now we're going to be moving on to our last one, which is the ATR trailing stop. So let me go ahead and get those charts set up, and then we're going to go ahead and get into the review right here, okay? And I don't want you to get the impression that I'm glossing over this final package here, the trailing ATR LX and trailing ATR SX. It's just that it's virtually identical to the parabolic tool that we just looked at in regards to settings. So I'm going to skip over a lot of this because it will just be repetition. Essentially, almost everything on this page is exactly the same as the parabolic, except that the file names are different, and the fact that it is emulating an ATR trailing stop instead of a parabolic trailing stop. And we want to go ahead and review the settings again. You can see the settings are like for like. They're exactly the same for the section in yellow. And so we'll spend a little bit more time on the section in magenta. But I will go ahead and run through these charts, and I'll do so pretty quickly because after this we're going to go through the live demo and then conclude the video. All right, so the first thing I want to do, I'm going to turn on Allow Long Entries and take off the other chart strategy that was loaded on here. So the trailing ATR is doing all of the trades. It's doing all of the entries and all of the exits. Okay, and it's doing long side only. And I want to put that up there on the chart so that I can add in the standard ATR trailing stop, which is located right here. Hit apply and OK. Okay, so what I've done is I've updated the standard ATR trailing stop so that the white dots are when it is in the short mode and the yellow dots are when it is in the long mode. And so you can see here again, just as in the Parabolic SAR, the standard ATR trailing stop is in a short status when the strategy is trying to make a long entry. And so if you're trying to catch the bottoms on these reversals, similar to the standard divergence, MACDX2, if you're trying to catch the bottoms and catch the reversals, the trend reversals, these built-in ATR trailing stops and parabolic trailing stops have a deficiency in that they are very often on the wrong side of your trade. And if you're trying to backtest entries using any of those tools, they're going to automatically take you out because they're already on the opposite side of the trade. Okay, so let's go ahead and reset the chart here. And then I want to go ahead and point out another very important element of these indicators, the trailing stop, parabolic, as well as the ATR. They both have the same features in that when the magenta colored squares show up at the lows of the candles, that is when the indicator is in a reset mode. In other words, it's trailing a long stop as long as you see the dots, but as soon as you see the squares, that's when it is in reset mode. In other words, the price has already stopped out of the trailing stop, and before the trailing stop can reestablish itself, the price action needs to reverse. And so as long as the price action is moving down, 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 and then as soon as you get the first bar in the up direction after a reset bar, then everything resets and the trailing begins again. Okay, so that's how that works. That's how you read the chart. And again, you have the color legend. So you've got bullish, bearish, caution, and danger. Same exact rules applied here to the ATR trailing stop as I described on the parabolic. So we really don't need to go into that in much detail. I'll go ahead and update this to an intraday chart so that you can get a glance of that. You can see the timeout LX is being plotted here, so it's not holding overnight. You can turn that off, but if you've got two chart studies on there, you need to examine the settings for each. So I'm going to turn off that intraday flat time on the divergence as well as on the trailing ATR by setting a 0 here. Okay, and now the positions are able to be held overnight, and you can see what it does to the profit and loss. So some of these strategies will do better if you exit before the end of the trading session close. You've got to experiment on your own and determine what works best for you. And if we go back to the daily chart, the timeout exits are completely removed from the chart because it's only available on the intraday. Okay, so all of these settings are going to behave exactly as I showed on the parabolic trailing stop. So let's go ahead and focus on these last three settings, which are going to be the ones that change the behavior of how the ATR trailing stop follows the price action. Let's go ahead and change this to 21. That's your length of your ATR moving average. You can see the dots and how they change. Let me move this to the side a little bit so you can see a little bit more of the chart. And we'll go ahead and put that back to, well, let's change it to 14 before we change it back to 5. Okay, see that, how that works? And we'll change it back to 5. And then let's go ahead and update the ATR factor. Okay, this is a big one. Okay, this one makes a big change, so I'm just going to make it a half point change lower, so 2.5. You can see how the trailing stop trails the price action much more tightly. Okay, so as you reduce that value, so we can change it down to 2. There you go. And sometimes a tighter trailing stop is not necessarily more profitable, as you can see in this case, because it takes you out more frequently, and what happens is you end up with a greater number of losing trades. Even though you're taking less risk on each trade, you've got a larger number of losers. So the original value was 3, and so we're going to change it to 3.5 and see how that impacts things. And you can see how a wider trailing stop actually performs better. In this particular case, you're going to have to do your own research and testing and determine which values work best for you. And then again, you can also change the moving average. Before I do that, I'm going to change that back to 3, and then let's go ahead and see if we get another big surprise with the exponential moving average on this one. And yeah, look at that, the exponential moving average appears to be doing better, just as it did with the parabolic trailing. And so that's really a heads up for me. That's really interesting. But it's nice to have a tool like this where you can play around with these different settings and work on optimizing and fine-tuning things to suit your type of trading style. Okay, and let's thumb through some of the charts here. This one, again, just like the last set we did, we're matching this up with our swing pivot trend rotations. Again, this is a premium indicator that's available on our website, sold separately, and it's being paired with the trailing ATR long exit, and you can see how it automatically adapts to that indicator as well, posting the exits and then trailing the stop. And let's see, we'll go ahead and move over to this one. Here is the standard deviation reversals indicator. And it's really all I wanted you to see is that it automatically adapts to that other indicator. So let's see, we'll go ahead and take a look at this one. This is where we go ahead and take a look at some of the other trading strategies that are included with Thinkorswim. So here we're looking at the Bollinger Band long entry, and we can go ahead and update that and take a look at some of those others just as we did before. So we'll look at the key reversal. Okay. And once again, at each entry point generated by the key reversal chart strategy, the trailing ATR LX is also adapting and handling everything on the correct side of the trade. Next, let's take off the key reversal and add the momentum LE. There you go. This one looks like it catches trend reversals, Looks like it catches bottoms pretty well, doesn't it? And the ATR trailing stop seems to be really effective at capturing those runners. If you're into catching those runners, then this might be a useful combination for you. Okay, let's add the spectrum bars chart strategy and take a look at that one. Very similar to the momentum entries, maybe just a little bit earlier in some cases. Then we'll go ahead and take this off and we'll look at the other two that we provide free of charge on our website, which is the Ichimoku. And again, with the Ichimoku, I've got to update the orders because there are some entries in here that I have to disable. And so once again, the ATR trailing stop is automatically on the right side of the trade when the Ichimoku is trying to enter long. The other one we'll add is the multi-time frame MACD, also available free on our website. And unfortunately, as I said previously, we don't get to see the profit and loss curve because of that glitch in Thinkorswim, but you can see there's only 2 trades on here and they're runners, and boy, that looks really good, doesn't it? Okay, now we're going to conclude the video by showing you some live, well, sort of live. We're going to use on demand and we're going to use simulated trading, but what we're going to do is we're going to show you how the trades unfold on the chart in sort of a real-time environment and show you how the orders are placed in keeping with the signals as they appear on the chart. Okay, here's our first example here. We've got a buy at market at the close of this bar, which is right here, because that signal is not locked in until that bar closes and the next one opens. So now we've got our position on in accordance with the way the chart is being marked by our strategies. And we've got the stops and target exits showing our target up here in blue and our stop loss here in the red. And so now we're going to go ahead and put a stop order at 448.65. And you can see that showing up here on the chart. And then our next goal is to put our limit order up here at 464.51. Okay, so that gives us our bracket. We've got our profit target order set at a limit of 464.51, and our stop order is placed at 448.65. Now we have to wait until the chart plays out, and I will update you as new bars are added to the chart. Okay, here's a quick update. We've had several bars added to the chart. You can see that after our entry, prices came down, nearly touched the stop loss order, but didn't. You can see that there's a green arrow there for a new divergence signal. There were 2 new divergence signals there, but they were not indicated by the chart strategy because the chart strategy, once it's in a position, it does not add to it. And so we still have this existing long entry that was triggered here, and we've got these bars that are moving in this direction. Now I picked one using the benefit of hindsight that was going to turn out profitable, so I do know it's eventually going to hit this limit order and take us out at a profit. And my goal is to not take up too much time on this video, but capture that moment when it does hit that profit target. And here's another update. We're getting really close to hitting that line. I've got it moving at 3 times normal speed here to speed things along. And we got a new bar. And there we go. Exited at target, and you can see that as soon as it marked it on the chart, we also hit that order and got taken out for a profit. And now we've got to manually cancel this order down here because I failed to create an OCO bracket to begin with. This is not really intended to be a lesson on how to place trades. It's really just a live demo to show you how to manage these orders based on what you see from the chart strategies. Okay, so I'm going to cancel that stop order, and then we'll go ahead and move on to the next example. I want to give you an example of each of these. So we're going to go over the parabolic trailing stop, and we're going to also include an example for the trailing ATR stop. And for the next demonstration, I had planned on using a tick chart for this, but as you can see, on demand feature is turned on and the chart is not updating. You see the ticks. You see the tick counter just incremented, and then it stops, it freezes up. And you can see the price action over here on the active trader. That is still updating like it's real time, but the chart is stuck. So we're not going to be able to use tick charts as an example for this particular section. So I'm going to switch this back to a 5-minute chart. We are going to do the NASDAQ futures. I'm going to find a good example for us to use, and hopefully we can get a little bit more stable performance out of this on-demand feature. Okay, so I've got the chart set up now to show the NQ futures, NASDAQ E-mini futures, and I've got it set to a 5-minute time frame. Let's go ahead and review what we've got loaded on the chart here. This is the focus of this section of the video, which is the trailing parabolic long exit. And we're matching that with one of our premium indicators available separately on our website called Swing Pivot Trend Rotations. So I've got it set up here on an intraday time frame of 5 minutes, and we're going to go ahead and wait for the next signal to show up. It's going to be the first cyan colored bar after this yellow one, and we're going to have to wait until the bar closes before we hit the buy market button. And I've also got it set up here, as you can see, I've got it set up to include a bracket order automatically. Okay, there we go. A little bit of patience paid off, and we finally were able to fill this order here. Now we've got to adjust the stop loss. So let's go ahead and move this stop order down here to the first trailing dot. And actually what we need to do, let me go ahead and expand that view a little bit more so that you can see what we want is the previous bar. Okay, so we really want our stop to be here at the recently closed bar of the trailing stop. Okay, so that's how you place the order, waiting for the signal to be locked in at the close of the bar using a buy market order. And now we go ahead and trail this stop as it goes higher. So each time it adds a new bar to the chart and the dot goes higher, we go ahead and update our stop order as the chart progresses. Okay, so I'm going to go ahead and fast forward this using the on-demand features, and I'll get you updated as the trade progresses. Okay, we've added a few more bars to the chart by hitting the fast forward button. Now go ahead and update our stop order. And what you would be doing during a live chart is that you would be trailing this each and every time a new bar is added. You would update that stop order, okay, and trail that stop order along those dots. Okay, so let me go ahead and add some more bars to the chart, and I'll get you updated as soon as there's something new to show you. Here we are again. We've added a few more bars to the chart, and I'm just updating that stop loss order. Again, it would be much more smoother if we were in a live chart, but it would take us probably an hour to go through this trade, and we can't use up that amount of time in the video. And I've added a few more bars to the chart, and I'm going to go ahead and update that stop loss. Again, like I said, during a real live chart, you would be updating this at each one of these dots, and you would always be one dot behind. It's always the most recently closed dot. That is your trailing stop order, okay? That's where the trailing stop goes, because that's how the strategy is designed to trigger. This dot here that you see on the current live bar, that is still a moving target, okay? You can see that those values will be updating as the bar is continuing to unfold. So you always want to use the most recent bar that is closed. It's fully locked in. It's a fixed target. That's the one you want to use for your trailing stop, okay? Okay, and unfortunately, the last time I hit the fast forward button, we jumped a few bars past the point where our strategy exited the trade. So I'm going to go ahead and move my stop up here to that last yellow dot, and that's where it would have taken me out of the trade. Hopefully, though, you guys understand the principle. The principle is that you want to trail these dots, these are your trailing stops, and you want to always trail the most recently closed bar. Okay, that dot right there is the one that you want for your stop loss order. And you can see here that this bar where the exit is posted by the strategy, the price is right there at that yellow dot from the previous bar. Okay, and then when it does that, when it drops below that, the trailing stop changes to a reset mode in which it prints one of these magenta colored squares. Okay, sorry that was a little bit clumsy, so I'm going to go ahead and close this out. And let's go ahead and move on to the next example, which is going to be the trailing ATR stop. Okay, for this example, I'm going to go back to the Costco ticker symbol because we seem to have much better success using on demand with that in the first demo here we did. So let me just go ahead and update you on what we've got on the chart. We're focusing now on the trailing ATR long exit. And just for the sake of demonstration, we are pairing that with one of our premium indicators that's available separately on our website, and it's called standard deviation reversals. So we've got the chart set up here, and it's a 5-minute chart. I'm going to go ahead and hit the play button. Now, as this bar completes, the next bar is supposed to turn blue. I know that from hindsight because I'm using on demand. And then we're going to go ahead and place that trade just as you saw previously, and we're going to trail it using the ATR trailing stop. Very much the same as the previous example, but we're using a different indicator for our exits. Okay, so here is the bar that's going to trigger. This is the long entry trigger for the standard deviation reversals. And we have to wait for this bar to close before we can execute that trade, because until that bar closes, that signal is subject to change. It may disappear before that bar closes, and you may have to wait for the next bar. So we always wait until the bar that has the signal on it closes. That's the way the strategy is designed. All right, good. So that bar closed. As soon as that bar closed, I was able to execute that order there, and we've got a stop that's a little bit too close to the price action. I'm going to drag it down to our most recently closed dot. I'm also going to update this to auto send. Those confirmations there were slowing me down a little bit, almost missed the execution point. I will confirm though that the on-demand feature is behaving much more smoothly now that we have the Costco ticker symbol on the chart instead of the NASDAQ futures. Perhaps it has something to do with the volume or maybe the futures market itself. The on-demand feature just might not be optimized for that. So I'll go ahead and step this through one bar at a time, updating the stop so that you can see how to play this out on a live chart environment. Okay, so we're about ready to add, we just added a new bar to the chart, but let's go ahead and zoom into our chart here. I'm going to expand this view a little bit so you can see clearly. Now that stop order, those two dots are exactly identical, the same level. So we don't have an opportunity here to raise our stop price. We have to stay right where we're at, because this dot right here where the mouse cursor is located, that is the dot that we need to be using for our trailing stop. Notice that the yellow dot is still moving, so it's not a fixed target. So you cannot use the trailing stop dot on the live bar. You must use the most recently closed bar. I know I'm repeating myself, but this is really, really important, and I want to make sure everybody gets it. All right, so we've just added a new bar to the chart. Prices are jumping around a bit here erratically because I do have it on 3x speed. It's on fast forward. So notice that the last dot is a yellow one. That's the most recently closed dot. It's exactly the same as the previous two. So we leave our stop loss there. We don't move that stop until we have a higher trailing stop print on the chart. Okay, we've added another bar to the chart, and this time we've got a chance to increase the price of our stop loss order. So we go ahead and put that right there on that yellow dot, which is the most recently closed trailing stop. And that red dot that you see there floating up and down, that is the active one, and we can't use that as our trailing stop. So we've got everything set up here, and now we wait for the next bar to open. All right, we got another bar on the chart. Go ahead and update that stop loss and wait for the next bar. Okay, I'm inclined to spare you guys some of the details here. You can see that our stop has remained at the same level for multiple bars. That's kind of the nature of the ATR trailing stop. So what I'm going to do is I'm going to use the benefit of hindsight. I know, in fact, that this strategy exits at 1340 hours, And so I'm going to go ahead and fast forward to that point on the chart and show you where the exit is. I think you guys have the idea now of how to use the trailing stop with your orders. Okay, and I fast forwarded to the point of the chart where this strategy is going to exit the trade. The stop loss order is here at right around the 465.68 level. We can zoom into the chart there so you can see that. And I'll go ahead and hit the fast forward button here. It goes at 3 times speed, and we'll see as this strategy then goes ahead and exits and the stop order is triggered, taking us out of the trade and concluding this demo for live trading. Okay, and there you have it. That's the conclusion of this live demo for the trailing ATR exit strategy. Okay, so I'll go ahead and refresh these charts. I want you guys to stick around here because the next section of the video, I'm going to go to another chart where I'm going to show that these tools are also working on the Forex. So I want to make sure you guys get to see some examples of some Forex ticker symbols. And I also might want to throw in some other chart types, for instance, range bars. We've already seen tick charts, so I want to show you some range bars, and then we'll finish up because this video is long enough, isn't it? Thanks for sticking around, and stay tuned for the conclusion of this demo video. Okay, and first up we have US dollar Japanese yen currency pair, and on this chart we have the built-in strategy called Bollinger Band LE, and along with that we have our stops and target exits strategy. So you can see that this is working just fine, plotting everything the way it is supposed to be. And here I have changed that to the trailing ATR long exit strategy. Once again, you can see how everything is working out just fine on this currency pair. There may be some currency pairs for which this does not work. For example, okay, that one seems to work. I was concerned because of the rounding issue that might be created because of the valuations of this currency pair. Okay, let's go ahead and take this one off and try the other strategy. Okay, that one seems to be working as well. I really was surprised because I thought for sure this would probably be an issue, but it's not. So good, that's a bonus. Okay, one more to try here. Yep, and that one seems to be working as well. Switch that over to the Japanese yen. And so you've got 2 examples of Forex pairs for which this is working just fine. All 3 of our strategies. 5 if you count the short side for the last 2. And I did want to also show you a range bar. So let's go ahead and change this over to QQQ and then update the time frame to a range bar. And we'll have 100 ticks. Let's just try it out and see what happens. Sometimes it takes a while to load. There you are. So there's a range bar. Now, I caution you against using range bars for backtesting. I would also caution you against using tick charts for backtesting. Because of the way they are constructed, you may find that they produce signals that cannot be replicated in a live market. Range bars are predicated upon their starting point. Change the starting point and you change the bars. And in some aspects, ticks are similar. And especially ticks across multiple platforms are vastly different. So if you're trying to build a backtesting strategy on Thinkorswim and you expect to be able to port that over and work on that for TradeStation, you're going to be sadly disappointed because the tick charts between the 2 platforms do not match. And you're going to find that to be the case for tick charts across all platforms. There's going to be some variation. So my recommendation, my highest recommendation, is to stick to time-based aggregation periods, 1 minute and up, for your backtesting. If you try to use range bars or tick charts, you're going to be in trouble. Okay, and I think it's time to wrap up. I know I've probably forgotten a couple of things, and I'll get some questions in the comments section, and we'll try to answer those as quickly as possible. And I'll use any and all feedback that you provide in regards to upgrading these indicators in the future, and also adding new features and including information in the demo videos as you think is necessary. So your feedback is going to drive the content. And in closing, I just want to say I really hope that these trading tools are going to be able to help you be more effective and efficient in your trading. And I hope that you're able to use them to maximize and optimize the work that you're already doing. Thanks for watching, everyone. Take care.